my 3-step formula that I use while trading stocks. Step number 1, the direction of the market. Now, it's really important to trade in the direction of the market. They say that trend is your friend, and I go with that principle as well. If the market is going up, I would be looking at buy trades only. If the market is going in the downward direction, I would be looking at sell trades only. But if the market is chopping around, I would try and look at trades in either direction. Step number 2, the strategy that I would want to use. Now, I would want to, because we are trading the stock market here, and it has an upward bias. Let's say we're trading the US 500 or the S&P 500 index. The general tendency is for it to keep going up. I would ideally want to look at pullbacks, but when there's a pullback in the bull run, and enter the market there. And when it goes up sufficiently, I would look at exiting the trade with a profit. However, if the market goes against me, I would want to cut down on my losses and come out of the trade. So that's the general strategy that I would be looking at using. Step number 3, what are the tools that I have that would help me to implement this strategy? By tools, I mean indicators. So an indicator, or a combination of indicators, which tell me when should I enter the trade, when should I exit the trade, when should I look at taking profit, when should I look at cutting down on my losses, whether the market is overextended or not. So if there is an indicator or a combination of indicators that help me to do that, that would serve my purpose. With that, let me jump onto the charts and show you what I mean by that. Here on the screen, I'm into TradingView, and I've opened up the Apple stock. The first thing that we need to do is determine the trend direction, right? So I'm on the daily time frame right now. Let me move to a higher time frame, say the weekly time frame, and zoom out as much as I can and see how the market has been behaving. So as we can see here, that the Apple stock is on its way up, and it's in a very big bull trend. And I can look at drawing trend lines. Could be one, be another. That overall, we can say that the direction is up, right? Okay, let's go back to our daily time frame where we will be trading. The second step that we need to follow is to determine what our strategy is. Now, we are in a big bull run, so we would ideally want to enter when the price is low, exit when the price is high, and thereby maximizing our profit. Essentially, what we're saying is that we would want to trade pullbacks. So the market is going up, it has a pullback, you would want to enter like somewhere there, ride this bull run, get out there, get in again there, make profit, and so on and so forth, right? So we would want to trade pullbacks. That is our strategy. Step number 3, we need to look at what are the tools that we have, or what is the indicator. Now, an indicator that can help us to determine when to enter and when to exit, thereby maximizing profits and reducing, cutting down on the losses, is what we would want to do. I use the TradeWisenet indicator, which I've just pulled up on the screen, which is easily downloadable and freely available to all Premium Club members. Now, before I get into the trade, let me quickly talk about how the indicator works. So the indicator is built as a combination of the super trend indicator, which gives us the direction of the trade, and the RSI indicator, which tells us about the overbought and oversold signals, overbought and oversold situations. When you get a full blue bar, when I say a full blue bar, it gives a value of 100 when I put the cursor there, which you can read here. And similarly, if it gives a full red bar, that is a 100 in the opposite direction. The rules that we would be following are as follows. So when we get a full red bar, when we get a full blue bar, we get into a buy trade. We let that buy trade run till we get the next blue bar, which is over 80%. So when I keep the cursor here, it says 80% here, that this is the 80% level. We would want, what we're trying to say is that the market is getting into an overbought position. So I would want to take some of my profits there. I can take all of my profits there, or take them partially and put a trailing stop in, right? So that would help maximize my profits, right? Now, remember, we're not taking any sell trades here to make profit, but what we will be doing, and this is something that I explain in my book, is hedging and trade management. So if we get a signal in the opposite direction, we will take a hedge, and we will try to close that hedge as we go ahead. Let me take an example, and I will explain to you what I mean. Okay, so let me try and go back to let's say the beginning of 2023, right? So the 3rd of Jan was the first trading day of 2023. You've not got a buy signal yet, so let's wait. And it is on the 10th of January when we get a full blue bar. So we get into the trade on the 11th of January. So let me put a line there to say, okay, we're in the trade. Now we let the trade run. Now on the 13th of January, we see that the indicator has given us a blue bar which is touching 80%, right? Which you can read there. So it is touching 80%. So what I would do here is I would close half the trade, put another there, close half the trade, put the remaining at a trailing stop loss and let the trade run. So as the trade runs, you keep getting more blue bars, but that's fine. You don't need to do anything, and the trade would go and close off on its own when the market starts coming down, right? So you made your profit. That's example number 1, right? Close that. Now you come to the 21st of February, let's say. There's nothing that you need to do because you're not taking any sell trades. You come to the 3rd of March when you get another buy, right? So we get into another buy trade. In fact, the market opens there, so you're in a buy trade. It keeps going. Now you get a red bar. Here is when you would be looking at hedging your trade, right? So you need to protect your downside, so you hedge the trade. So you've hedged your trade now, right? You're in a full hedge. You keep going, and then you get another buy. So you take this buy, but this time what you would do is, if you'd taken, let's say, a 0.1 lot size there and a 0.1 lot size there to hedge it, now you would take a 0.2 lot size. So let me make a note of that to make it easier. So we had taken a 0.1 on the long side. Now we take a 0.1 in the short side. You get another buy, so you take a 0.2 on the long side, and you keep going. And this would take you out of the previous hedge, and you would close in at either a break even or a small profit. Now remember, what we're trying to do here is either be first time right. So if you're first time right, as we were in the previous case, we make a profit and get out. If, however, the trade goes wrong when you take a trade and you get into a hedge, we're looking at closing the trade at break even, right? Or a small profit, for that matter. So this is how the trade, the indicator works, and how the trade would work. Now, if I keep going, let me remove these lines. We don't need them anymore. So right, so we use this trade to close the previous trade. We don't take this trade as we're not taking any sell trades. We take this trade. We close half of the trade there, let the remaining run. Anyways, it's a profit. Don't take that trade. Take this trade, full hedge. Then we get into another buy trade, full hedge. So that's say 0.1, 0.1, 0.2, 0.2. Then you get into a 0.3 here, and you make your profit. Now, if you're able to make enough profit to close the previous trades, you do that, or you anyways close half the trade and let the remaining run, right? Come to the, well, you don't take this trade, it's a sell trade. You come to this trade, which is again, well, you take a buy trade there, and looking at and you would again get into 0.3 as you've not closed the previous trade, and so you would keep going, right? And if I keep scrolling to the right, we would just be following the same principle and structure. So what this would do is it would protect your downside, and it would keep you going, and you would be riding those bull runs like that one there, which is a pretty big bull run. You're maximizing your profits, not getting into that, and so on and so forth. And that's the strategy that I use to trade stocks. All my trades and my strategy are based on my book, the link to which is in the description below. Consider joining the Premium Club, where each member gets a free copy of my book. They get to download the TradeWisenet indicator for free. You can book a one-on-one session with me every week to go through your trade. If you found this video useful, like and subscribe, and I'll see you next week. Happy trading, everyone.